This video is review of KDDI's FY 2024 financial results. KDDI Corporation is a major Japanese telecommunications and information technology company. It is the second largest telecommunications company in Japan, known for offering a wide range of services that include mobile and fixed-line communications, internet services, and data center operations. KDDI operates under the AU brand for its mobile phone services and provides solutions for both individual consumers and businesses. FY 2024 consolidated financial results. For the fiscal year ending March 31st, 2024, KDDI reported consolidated operating revenue of 5,654 billion yen, marking a 1.5% increase from the previous year. However, consolidated operating income decreased by 10.7% to 961.6 billion yen. This decline was attributed to temporary impacts such as reduced revenue from Rakuten roaming and provisions for lease receivables in their Myanmar telecommunications business. Consolidated operating income factors for change. The decrease in KDDI's consolidated operating income for FY 2024 was influenced by several key factors such as Rakuten roaming business and Myanmar telecommunications business. Rakuten roaming revenue. Rakuten's roaming agreements, particularly with KDDI, had continued to contribute positively to KDDI's revenues. However, there is a mention that Rakuten has expressed a desire to reduce the extent of their roaming to save costs, and there was a temporary reduction in revenue from the roaming agreement with Rakuten. Myanmar telecommunications business. KDDI, in partnership with Sumitomo, has faced significant challenges with its telecommunications business in Myanmar. The joint venture, KDDI Summit Global Myanmar, has been heavily impacted by the stringent foreign exchange regulations imposed by the Myanmar Central Bank, which have delayed the collection of dollar-denominated lease payments. As a result, KDDI Myanmar recorded a substantial provision of 119 billion yen for doubtful receivables in the fiscal year 2024. These financial difficulties have led to a considerable downgrade in KDDI's profit. Despite these challenges, both KDDI and Sumitomo have expressed their commitment to continuing their operations in Myanmar, albeit while exploring various options for the future. Acquisition of Lawson. KDDI has entered into a capital business partnership with Lawson, Inc. and Mitsubishi Corporation, aiming to integrate their real and digital resources to enhance customer services and address environmental challenges. This partnership will leverage the extensive customer bases of both KDDI and Lawson, integrating their physical stores and digital platforms. The collaboration focuses on improving customer convenience, optimizing store operations, and promoting sustainability through initiatives like installing solar panels and reducing plastic use in Lawson stores. Acquisition of Rakuten. It's not official, but there are rumors that KDDI may be planning to acquire the Rakuten Group. The Rakuten Group is a diversified conglomerate based in Japan, known for its prominent presence in e-commerce, internet services, fintech, telecommunications, and more. Rakuten operates various services, including the online shopping mall Rakuten Market, Rakuten Travel, Rakuten Books, Rakuten Mobile, among others. By acquiring Rakuten Group, KDDI will acquire Rakuten Economic Zone, which is Rakuten's extensive ecosystem of interconnected services and businesses designed to enhance customer experience and loyalty. This ecosystem includes e-commerce, fintech, digital content, communications, and professional sports. By integrating these diverse services, Rakuten creates a seamless user experience, encouraging customers to stay within the Rakuten ecosystem for various needs. KDDI could expand their own consolidated financial forecast for FY 2025. KDDI's consolidated financial forecast for FY 2025 anticipates steady growth across several metrics. The company projects an operating revenue of 5,770 billion yen and an operating income of 1,110 billion yen. This forecast represents a slight increase in revenue from the previous fiscal year, but a notable recovery in operating income, which had declined in FY 2024 due to various factors, including decreased Rakuten roaming revenue and issues in the Myanmar telecommunications business. KDDI aims to enhance profitability through growth in its core communications services, as well as double-digit growth in its finance and energy businesses. The forecast also reflects a positive outlook for KDDI's business services segment, which is expected to drive substantial profit increases. KDDI Consolidated Financial Highlights Forecast for FY 25. KDDI plans to enhance the average revenue per user through the expansion of its 5G network and services. This includes leveraging the increased adoption of 5G technologies and offering new, higher-value services to its customers. While revenue from Rakuten roaming expected to decrease, KDDI aims to offset this with higher average revenue per user from its core customer base. Business services anticipated double-digit growth driven by digital transformation, DX initiatives, IoT solutions, and data center services. Financial services. Significant growth is expected in KDDI's financial services, particularly through the expansion of AU Jibun Bank and Pay services. KDDI's strategic initiatives for FY 2025 reflect a comprehensive approach to increasing profitability by focusing on high-growth areas and enhancing the value provided to its telecommunications customers. Shareholder returns. For FY 2024, KDDI Corporation's dividend per share was 140 yen, marking an increase from the previous year's 135 yen. The company has maintained a consistent trend of increasing its dividends, aligning with its policy of enhancing shareholder returns. For the upcoming FY 2025, KDDI plans to further increase the dividend per share to 145 yen. Additionally, KDDI announced a share repurchase program of up to 300 billion yen. Conclusion. For FY 2024, KDDI reported an increase in operating revenue, but operating income decreased. However, this decline was a temporary impact from Rakuten roaming income and provisions for lease receivables related to the Myanmar telecommunications business. Looking ahead to FY 2025, KDDI projects increase of both operating revenue and operating income. The company expects to benefit from positive trends in communications ARP and significant growth in its finance and energy businesses. Dividends has being increased every year, and the company is also buying back its own shares. KDDI is one of the stocks that is expected to continue to perform steadily in the coming fiscal years.